Stardust is a North American franchisor of renewable energy installation services, including solar panels, energy storage systems, and electric vehicle supply equipment. CEO Mark Tadros is here to outline Stardust's plan to grow its capital-light renewable energy franchising business organically and through acquisitions. It's Wednesday, May the 14th. I'm Martin Gagel with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Mark, thank you very much for joining us. Great to have you here. How are things going?
Great. Thanks, Martin. Thanks for having me.
All right. You've got a presentation for us. Why don't you do the presentation, and then
Sure.
we'll get into a conversation and Q&A.
Okay, great. Let me dive in. First, thank you to everyone who's joining us today. Really appreciate the opportunity to present our company to you. I'd also like to thank you, Martin, and Radius for hosting me today and giving me this opportunity. So let me start by giving you a quick description of who we are and what our company does. Stardust Solar is North America's largest franchisor of renewable energy services. So essentially, we're a very simple, basic, asset-light franchise model. In the simplest terms, we want to be the McDonald's of solar, or maybe a closer example would be the Mr. Lube of solar. So our franchisees are out in the field installing solar panels on homes and businesses, energy storage, and EV chargers. So those are the services we're offering the market through a very capital light, profitable franchise model. So first thing you should know is we're a recent issuer, okay? So we started trading on October 7th, and we came via RTO, qualifying transaction with a existing CPC on the TSXV. Today, we're sitting on 92 franchise locations across North America. We had 87 just last week, and this week we did a big signing with a European investor to add 5 more territories in Miami. So today we're actually at 92 locations. You'll also notice here that there's some forecasted numbers, and we're on trend to hit these numbers that we've been tracking now for a few years. Furthermore, let's talk a bit about the solar market. I think that this is probably the most important piece to why we're a good investment. The reason being the growth of the solar industry. Today, solar is adopted by 6% of households in the US and only 1.5% of households in Canada. Now, the Department of Energy came out and did a study on the solar industry and said that number will be 15% by 2030. So you're looking at almost tripling the adoption of our market in the next 5 years. We're expecting hyper growth for those 5 years and then sustained growth for 25 years after. The reason our model works so well is because we're actually using an economy of scale through a very profitable franchise model to help local installers be more efficient, have brand power, and be able to offer standards in the market, creating a national brand that people recognize and trust. Just recently, we completed the acquisition of our largest competitor, Solar Grids, in the US. There was a lot of news about this. The transaction completed in December, and we added 49 new US territories to our existing 31 Canadian territories at the time. So this gave us a huge footprint to start with our US growth. And I'm happy to announce we've actually now merged the 2 brands, and there will be some news coming out about that in the next few weeks, but we've now converted all Solar Grids franchisees over to the Stardust Solar brand. So going forward, the public brand, Stardust Solar Energy, will be the only brand in North America operating in the market. So a common question I get is, what helps us make our franchisees successful? What's the benefit of buying a Stardust franchise? Well, the first thing is they get our brand, public brand, North American brand, extremely well recognized, and they get all of our digital marketing services. So it's not like a local player that's getting into solar needs to create a new brand and a website and manage all of that stuff. We have those resources at head office. Second is training. So this is a really big part of our business model, and I'll talk more about it in a few slides. But training is critical for the market. It's such a new industry, solar, respectively. And there's a lot of players out there who are operating very loosely, actually, honestly, giving the industry a bad name. At Stardust, we have CSA and NABCEP certified training, and we ensure all of our installers go through that training before they ever get on a roof. Third is our partnerships. Through our economy of scale, we've worked with multiple large brands, small brands, finance companies, and one of our biggest partnerships is Tesla. So when you come into the Stardust system, you gain access to all of our partnerships automatically. Some of these relationships took us a decade to build. Proposal generation. So when you're out in the field and you're meeting with Mrs. Jones and she asks you for a quote, you're going to need to create a proposal, a custom proposal for that home. That could take, an operator hours at night to service and quote all of these custom homes. With our system, you simply send in your utility bill to head office, and within 24 to 48 hours, you have 2 options to present your clients. So it's a big time-saving service we offer here at head office. The 5th thing we do is engineering permit plans. Now, this is big. This is specialized work. We have electrical engineers on staff, and every time a project gets signed or sold, the municipalities and the utilities in those regions are going to require engineer stamped drawings. They're going to require proper plan sets, and we offer that service to our franchisees. Again, saving them a tremendous amount of time so they can do what they do best. That's getting up on the roof, installing, and doing local sales. The next thing we do for them is financing. Oftentimes, clients might not have the cash to put up front. We work with third-party financiers to finance all of our projects when necessary, and the contractors, our franchisees, get paid up front by those finance companies, and then the homeowners go on for the length of the term of their loan. And then finally, we also offer them supply chain logistics and warehousing. So this is another really big piece, and it's what keeps our model so light. Our franchisees don't need to have a storefront or a big warehouse and hold on to equipment. No, we manage all of that at head office, and we distribute across North America right to the job sites. So we'll literally palletize one job for Mrs. Jones, drop it at her house, then the franchisee will show up with their team and execute the installation. It keeps the franchisee's cost very, very light. One other really nice thing about our franchise model, which is a big plus for someone coming into the system, is that they get a stock option plan. So technically, we consider our franchisees as consultants. And as consultants, we can issue them stock options. It's a great motivator for a local franchisee to perform well and earn themselves more options. And now they're making profits on their local business, but also participating in the success of the stock. So this is a really nice package that people get to come into our system. Let's talk a bit about the business model and how it works. Okay, so at head office, there's 3 columns of revenue generation. The first is products and services. Now, products and services represents probably, I want to say 70% of our revenue pie and operates at a 25% gross margin across all SKUs. So when a franchisee signs on with us, they guarantee that they'll buy every single solar panel, every single nut and bolt from head office. And we also offer them the engineering services that I mentioned earlier. So those products and services are the majority of the revenues. 70% of the pie operates at a 25% gross margin across all SKUs. The second column is education and training. So when you're in our system, as I mentioned before, there's accredited training you have to go through, and that only represents about 10% of the revenue pie, but very high margin business at 80% gross margin. And then finally, the most important and the fastest growing piece of our revenue pie is our franchise fees. So when someone buys into our system, they have to pay $50,000 initial fee to enter the system, and then a 5% royalty in perpetuity for 10 years on their top line revenues. Now, 10 years is the length of the contract, and there is opportunity to renew if both parties would like at that time, but 50K up front plus a 5% royalty in perpetuity. Now, those franchise fees represent 20% of our revenue pie and our 100% gross margin. So when you put those three columns together, you get a company that's operating at about 30 to 35% gross margin. So I want to talk about the education a bit. I touched on it a few times, CSA, NABCEP approved. One thing you should know is our company was actually a training and compliance business before we became a franchisor. So this is part of our legacy, and it's where the company began. That model was working extremely well. We trained over 2,500 people in North America before we became a franchisor. 2020, we had COVID that hit, and it changed our model. We weren't able to run classrooms and workshops, and that's when I pivoted and launched the franchise model. But the important thing to note here is that we have this accredited training that's extremely difficult to obtain. We are accredited by CSA in Canada, and if you go to the CSA website under training providers, you'll see there's only 5 companies in Canada that are authorized to train the workforce entering the solar industry as a prerequisite for their CSA certification in solar. And then in the US, we're actually a NABCEP proctor, which means that we can offer NABCEP certificates to anyone in the world that completes our training. Now, the reason that this is so important is a few things. One, it gives reassurance to the franchisee that they're being properly prepared for their venture. 2, it tells all the homeowners that everybody in our system has proper training. That's critical for us to be able to build the brand and really create that national enterprise. But 3, it's our biggest differentiator to anybody coming behind us. There will be other franchisors and there will be people trying to get into and copy our model, but nobody is going to be able to have a solar franchise that has this type of accredited training. This puts us, I would say, 2 to 5 years ahead of any serious competitor. There's been a lot of controversy in the media about Tesla. Some people love them, some people hate them, but let's face the facts. Tesla is the largest player in our industry in the world, and we are a very good partner of theirs, one of their largest distributors of Powerwalls in Canada. Now, being associated with a brand like Tesla gives us a lot of credibility in the market. And any of our franchisees that enter our system obviously get trained through Stardust and all of our accreditations, but we also get them Tesla certified so they can now offer Tesla products in their local markets. Okay, so we talked a little bit about how many franchisees we have, which today we're at 92 franchise territories. I did also mention the 2,500 installers that we've trained and certified across America, or North America, I should say. And also we have 7 training operations all across North America as well. So you can see our footprint is very well established in the North American market. And we plan to keep growing that aggressively through the next 3 to 5 years. Going forward, there's a lot of different ways we can add franchisees. And I do get this question quite a bit. How do you go find your franchisees? What's the process to bringing someone into the system? Well, there's classic ways like digital marketing or paid media and advertising, which works quite well, actually. And we're able to generate a new franchisee for, I want to say, 3,000 to 5,000 Canadian dollars. There's also creative partnerships and associations like franchise brokers. Now, the franchise broker model or avenue to add is a little bit different. It accelerates growth, and we're getting into that system, especially in the US, but the fees on the brokers are terribly high. So you're looking at $30,000 of our $50,000 every time a broker brings someone to us. However, that's the path towards scaling and towards growth. Finally, our training is also a feeder system. So we still offer classes to the public, and people join us every single month. I want to say we do about 20 to 25 students in our 2 training locations where we have live training, one being Vancouver and the other being Montreal, where we host classes on a monthly basis. And that turns into a feeder system. People from all walks of life join us for our training, and we're able to upsell the good ones that survive our training and do well and turn them into franchisees. And then finally, M&A. So this is another really nice piece about being a public franchisor. We can use our stock or cash to convert small electrical contractors or roofers into Stardust franchisees. And those types of trades or contractors are plentiful across North America. So we have lots of opportunity to do small M&A or big ones like we did with Solar Grids, where we onboarded 49 territories in one shot. So this slide, there's a lot of text. I won't go through all of it, but I think the message we want to convey here is we're very good with deploying capital. Okay, so this is a growth play. This is not an R&D project where we're continuously trying to refine a software or develop some type of robotics or create a rocket to go to Mars. Those are terribly expensive R&D projects. No, what we're doing is taking investor money and spending it on marketing and staffing. Marketing and staffing. So it's a continuous cycle of scaling up the operation. And larger the operation gets, the more profitable we become. Our EBITDA grows as the system gets bigger. So when we take in capital, it's usually going to go towards adding new staff, possibly doing some M&A if it requires cash, or marketing the brand or marketing the stock. System-wide sales. So I want to be very clear about something. This represents the sales of our franchisees, not of head office. Although they are closely correlated, these numbers are based on our franchisee sales. And I don't want to talk too much about financials today, but what I can tell you is these trends that you see here are continuing into 2024 and 2025. The plan for the future, the growth trajectory that we're looking at, is going to be aggressive. And this is why we listed the company. The entire point was we knew we had a unique business that nobody else had. We wanted to jump into the capital markets, raise some money, and create this national brand quickly. So our goal for this year is to get between 100 and 125 franchise territories. Now, as I mentioned at the beginning of the call, today we're at 92. So we're definitely on that path. 2026 is going to be the exciting year for our company. I can also talk a bit about that after my presentation's completed, but we're looking to go between 150 and 200 locations by the end of 2026. Corporate team, I won't spend too much time here, but I can tell you very quickly, all of our board members, Ohad is a CEO of a public company, StarMet Technologies. Young Ban, CEO of Purpose ESG, a publicly traded company. Vitaly Melnikov, 20 years experience as a CFO in the venture exchange. And Eamon McHugh, over 10,000 hours, 10,000 hours in solar installation, master electrician, and is a phenomenal driver in our business. Myself personally, for those of you that don't know me, I've been an entrepreneur for close to 15 years now. I've been working for myself. I have 2 prior exits under my belt. One was in 2015, a software company I created called Pro Draft League that ended up getting listed on the CSE. And I also sold a training and compliance business for DOT in 2018, and that was a private sale of business. So I have a lot of experience in building companies and creating return for my shareholders. So a little bit about the cap table. Today, I believe we're trading at 17 cents. It gives us a market cap of 12.5 million, and we have 84 million shares issued and outstanding. I think one really important note for everybody here is management or insiders own 39% of that. And myself personally, I have 16 million of the 84 million shares issued and outstanding. In terms of working capital and debt, we are sitting right around $1 million in cash and assets. And actually, our debt has gone down drastically. We're at only $125,000 or $130,000 in debt on the company. So very healthy.
All right. And then obviously, if it's more suburban with single detached homes versus Manhattan kind of area that makes it a difference there. With the and I'm just trying to understand, you have that good slide on the revenue models. So when someone makes a quote to an interested homeowner on a solar system, you give them, they give the basic details of the quote. Your team at head office puts it together, sends it back to them in 24, 48 hours. And is that part, do you charge for every quote that's done? Is that like a revenue model, or is that just part of their sort of a cost that gets embedded?
Yeah, so great question. The quoting service is not part of the revenue model today. It may be in the future, but right now we quote the systems as a way to keep tabs on all the projects our franchisees are working on. However, in that same slide, I talked about the engineering plan sets. So
Yeah.
once a project gets signed, those plan sets, basically we take the quoting documentation and we convert it into a proper engineering plan set, and that we do charge, and it is 100% gross margin service. So a classic plan set, we'll charge a franchisee about $500 for that. It would cost them probably $1,200 to get it done independently. And they're also selling that to the homeowner. It's part of the proposal to the homeowner. So they're making a margin on it as well.
Sorry, and you say it's 100% margin. Don't you have to hire engineers to like do
Oh,
that?
yeah.
And
I
like,
mean, gross margin, right? So those are operational costs. I'm just talking about direct
oh,
costs.
that's sort of just that's part of you put that under your fixed costs, not under the
Right.
then when they actually buy the solar panels, and that they, I don't know, buy them from you or through you through your supply agreements, and then they and then you clip a 25% margin on that for managing the supply chain, and obviously you could buy cheaper than they could, presumably because you've got purchasing power from on as you're buying on behalf of a lot of franchisees.
Yeah, that's correct. That's exactly correct, Martin. So we use economy of scale, the purchasing power of all of our franchisees. We negotiate really good pricing from our suppliers. 25% is a blended number across all SKUs. We make
Okay.
probably, 33% on our high-end margin stuff like modules, and then maybe 18% on batteries, which are very expensive. But even when we're taking 25% margin on equipment, our franchisees are still 10% cheaper than their local competitors. It gives you an idea of how deep our discounts are.
I was wondering, could you flip it back to that slide you had with the map of North America and the little stars and suns with the
Sure.
territories there? I just want to understand a few things. The smaller star solar installers, are those
Yeah.
and then you have franchise territories. What are the difference between the solar installers and the franchise territories?
Thank you for that. It's really important we clarify this. So solar installers are people that lived through our accredited training. Okay, they're not
Okay.
necessarily franchisees, and we've trained people all over North America. The franchise territories are people who have actually bought into the system and are part of our revenue model. So those
Okay.
solar installers, they'll service our franchisees, they'll help us with projects, but they're not part of the franchise model. They're not part of our revenue model.
Okay, and then the yellow suns are where you have your training operations, and you.
Yes.
Okay.
So let me clarify that as well. So we have two training hubs where we actually have offices where we're training people. One is in Montreal, one is in Vancouver. Those two locations are hosting people on a monthly basis from the public to get trained in solar. The other sons that you see there are trainers that work for us remotely. So they will travel all across North America on our behalf. If we have a new franchisee in Florida, for example, we'll ask our guy from New Mexico to fly out to Florida. So those are training, accredited trainers that we have in our ecosystem.
Given the geopolitical nature of the world right now, we couldn't help but talk about Trump tariffs, the Trump's not non-love of seemingly renewable energy type things.
Yep.
So generally talking about that, and I guess in Canada as well, the rebates or incentives to buy solar. How is that changing, and has that been a big driver
Yeah.
of your business to date? And let's say if there is a removal of those, is that how much does that hinder you?
Okay, great question. It's kind of the topic of the day, if you will. My thoughts on this are politics change all the time. It's just like, a stock. It's going to go up and down on a day to day based on the latest news. But we're a long company. We're building this business for the next 30 years out. This is not a short-term play. And over the next, let's call it 3 or 4 decades, renewable energies are going to be taking over our homes and our lives. Literally every single house is going to end up with solar and a battery bank at some point into the future. So regardless if, Trump is making some, news one day because he wants to, rescind incentives, that may not actually end up becoming the case. I don't feel that it impacts the overall trajectory of the industry. Now, to be more specific, in the US, there could be, a rescinding of some tax credits that are there. But, Martin, what's really driving the growth right now is not necessarily the incentives. It's how cheap and how cost effective the equipment has become. So over the last 8 years, the solar panels in general have gone down by over 45% in cost. But in that same time, they've doubled in their technology and in their production. So that inverse relationship between cost going down and tech going through the roof has created an ROI for homeowners everywhere. Like you can put solar on a house in Alaska and get your money out well before the life of the system. So, the news and the politics sound scary, but I don't think it impacts our industry tremendously. In Canada, I actually think that we should be hopeful for the new administration that's coming in. From what I've heard, at least, it sounds like Mark Carney plans to deploy resources to develop renewable energies, as well as pipelines and other things to make Canada, as he calls, an energy superpower. I think that's a very smart idea, and I think you'll see renewable energies grow in Canada, and Canada is really the backbone of our company.
And the tariffs, a lot of especially solar equipment comes out of China. How is that, or is there some carve out for that they made for iPhones? So how is that impacting you, and how big? And obviously, it is 10:30 on the 14th, so things could change within half an hour. How in the current state, how does that impact you?
Well, I was about to say it could change by the afternoon, right? So
Yeah.
flip flops a lot. It's hard to figure out where we are exactly, whether or not there's tariffs on China and the US. I think they got reduced just recently. But here's the beauty of our business model. Okay, one, we have two separate corporate entities on either side of the border. So we have an operation in Nevada that services our American clients, and we have our head office in Vancouver or Burnaby, BC, that services our Canadian clients. So we're actually two companies. Our corporate structure has a few other corporate entities in it, but the idea is we're operating independently on both sides of the border, and we're not transporting equipment across the border lines. So we won't be terribly impacted there. In terms of bringing equipment in from overseas, there's a big discussion to be had there. Here's the good news. We don't only buy from China. Okay, so in the US, we use a lot of Hanwha Q cells, which is a Korean product. So a lot of the equipment we're importing in the US is actually coming from Korea. Now in Canada, we do use a Longi module. Primarily, we're not only using these products, but primarily, I mean. And that's actually been very cost effective, and their technology is very good. I can actually take this on a segue, if you don't mind, Martin. We recently put out a really nice piece of news about an LOI we signed with a warehousing and distribution company in Owen Sound. So we'll actually now be opening up our own distribution point in Central Ontario and further increasing the margins on our equipment, which again represents 70% of our revenue pie.
You're relatively new, less than a year in the public markets. How has that gone in terms of your chart has done quite nicely given all the volatility and so forth. How is your transition to a public company gone, and in terms of financials and so forth?
Oh, it's been a breeze. No, you know what? It's been a challenge, but an enjoyable one, I would say. You're right. We only started trading on October 7th, so been public for 7 or 8 months. Lots to get used to, a lot of regulatory requirements, but we are a very transparent company, and I feel like we've, been able to withstand that pressure quite nicely. The company itself is doing well. And I do appreciate your comments about the chart. That's been a lot of traveling, road shows, presenting at the company, and we haven't actually started marketing the company yet, which will begin this month for the first time. So there's a lot of exciting times ahead. But in terms of some challenges, everybody knows we filed an MCTO just recently because the financial statements were late. At the end of the day, I'm told that this is quite common with new issuers. We're maybe not the auditor's number one priority, but that is progressing quite well. I will be putting out a news release here in the next day or two to give everybody an update. And I expect, end of May or early June, those financial statements will be out. The good news is this, there's no issues. There's no major problems. It's just truly our auditors are taking time because we're a new issuer to go through our statements before they sign off.
Okay, so we'll get that out soon, and that'll take that risk off the table. You provide these services. Are there any new types of products or services that you can offer your franchisees to help differentiate them and give them and add new products out there to grow and drive revenue for both your franchisees and yourself?
Yeah. So, thank you for that. Appreciate that question. In terms of our core supply chain, we are actually working with some Canadian-made equipment that we're going to be coming to market with just to further reinforce some local assembly of batteries and different kinds of products. So we are working internally on our supply chain, but there is an exciting piece that we're coming out with. It's a AI-based droid, which you can see here, which is a piece of technology hardware that Stardust is going to be bringing to market in a white label partnership with an EU company. So again, we're not deploying on R&D here, but we will be getting rights on North America to distribute this product under the Stardust Solar brand. I'm going to be announcing the partnership very shortly, and I can't go into too much details, but it's an AI-driven device which will be speaking to your solar array, your energy storage, your home, and to the grid to manage your energy the most cost-effective way possible. Now, again, I won't go into too much details, but what it'll do is it'll make the homeowner's system, their solar system and their energy storage system, a smart system, AI-based, and that'll increase their savings. Now, the best part of this partnership is we've been able to negotiate a residual income on those savings. So for every device that we install across North America, we'll be taking some passive income in a percentage form on the savings that homeowner gets. Very exciting stuff coming right around the corner.
All right, interesting. Okay, and just to clarify, you didn't design this; you're licensing it from I think you said an EU partner, and then you'd be their distribution arm, call it, for North America.
Correct, exclusive distributor for North America. We did not create or design the technology.
Okay, interesting. All right. You mentioned you do a little bit of commercial or light industrial panels. Is that a potential market opportunity for you, or is that just with other types of competitors can focus on that better? And I guess what I'm saying is, are there any other, you've got some new products coming out, are there any other kind of market segments that you could target with this franchise model or through another means?
Yeah, for sure. And yes, we can target commercial projects, and we do some light commercial. So what does light commercial mean? Any kind of corporate building, office building, warehouse building, those kind of buildings we can outfit with solar quite easily. What we're not doing right now is the solar fields where you're talking about megawatts of generation. That's really a large scale, utility scale project. But we do some commercial right now. It's part of our business model. And as our franchisees get more mature, they're able to handle those more complex projects. So we're now in our 5th year of franchising, and we're seeing a lot of our mature franchisees be able to take on those projects, as well as the residential. However, I come back to the residential market because I truly believe the opportunity, the high margin opportunity, is in the adoption of residential solar. It's kind of the thesis of our company.
All right. And you mentioned financing packages. In the past, a lot of residential solar was based on financing and so forth. And is it a little more simpler model where you say, okay, it's going to cost, I don't know, $5,000 or whatever the amount is. Here's a 5% loan on it, and then these are the savings you expect. And do you clip those from your financing partner, or it's up to the residential homeowner on how they want to finance it? Just talk about that financing funding model.
Sure. And no, we don't take a margin on the financing.
Okay.
That truly becomes a contract between the financier and the homeowner. Our franchisees, the installers, get paid out upfront, and then they in turn pay us their royalties, engineering fees, equipment fees from what they get paid from the financing company. And financing is huge in our industry because the life on these systems is often 25 or 30 years, but the financing terms will usually be about 10 years. The beauty is the savings on your electrical bill usually cover your financing charge. So you're at a net zero in terms of a household on your cash flow, and in 10 years, you're paid off. I can also tell you in Canada, there's a fantastic incentive that's live right now, the Greener Homes Loan, where a homeowner in Canada can get up to $40,000 to install solar and energy storage on their home at 0% interest for the next 10 years.
Hard to go wrong with that kind of financing.
It's a federal package. It's a great package.
All right. I think we've covered all the main topics here. I can't really think of anything else left. As we wrap it up, any final comments or anything we missed that you'd like to talk about? And then any final thoughts to leave investors with?
Yeah, no, thank you, Martin. I think we really did a good job of covering the business model. I hope it was clear for everybody and you understand exactly what we're doing and where we're going. I think the big thoughts I want to leave the investors with is that we are approaching EBITDA right now at this very, very moment. We are scaling very, very quickly. And I also think we're terribly undervalued personally. It's an excellent time to take a look at this investment opportunity and get a unique stock in your portfolio that's growing very quickly. Finally, I'd also like to point out that we're also aiming for a NASDAQ listing in 2026. So as I mentioned, the 2026 year is going to be the huge growth year for our company. Right now, we're just, getting our feet wet, getting the public market experience, cleaning out a lot of the expenses we had in 2024 to get listed. It was a very expensive year. We're optimizing our model, refining our franchise system, but 2026, that's going to be the growth year, and we're planning to jump to NASDAQ next year.
All right, excellent. Mark, thank you very much for taking the time to chat with us, talk about the Stardust model and your growth opportunities there. Thank you. I look forward to having you back as we get some more news updates, and have a great day. Thank you.
Thank you very much. I appreciate it.